Hi everyone, I'm just going to give another 1 or 2 minutes just for everyone to join and then we'll get started. Thank you for your patience. Yeah. Okay, guys, I think we'll get started. Just to honor the time and everyone who was on time. I think let's get started. The idea is not to have a too long session. I think what I'm about to share with you guys is not something that needs to take um, longer than an hour. So let's aim to be done within an hour. I know for some of you, this is a big sacrifice that you are making because the time zone that you are in might be a little bit difficult or late. So well done on your commitment and your willingness to be up at this time of the day and and educate yourself. So I want to just commend you for doing that. Um, So quickly, just how this evening is going to work. I'm going to ask you to please keep your mic muted. Um, that's just to avoid any people talking over one another. If you have a question, please pop it into the chat box. And then towards the end of the session, maybe in the last 10 minutes, I will look through the questions and then I will aim to answer those questions if that makes sense. I believe everything that I'm going to show tonight is fairly simple. And if you have been on the Red Pill Traders Telegram group, then you should have basic understanding of what I'm about to share. I think the main thing that most of you might still need to learn would be the BBMA concept. But I'm going to aim to do that tonight and just simplify those concepts to a very uh, easy level for everyone to understand. And I will go through a quick basic on just SNR levels as well so that everyone is on the same. Okay. Cool. Let's get started. So maybe you can just give me an indication, the vet, because I know you. Don't you just want to just unmute yourself quickly and just give me a thumbs up and say if you can hear me or not? Is the sound fine? Can you see my screen?
Fine, bro.
Okay, perfect. Thank you. Okay, let's continue. Okay, so firstly, obviously, you guys, for those of you who don't know, so SNR levels, SNR stands for support and resistance, or supply and demand. And basically, how the market works is if we look at a ceiling and a floor, ceiling would be resistance. So when price gets to resistance above, it rejects from those levels and then falls to the other side. Support, you would look at it as a floor. So when price comes down to that level, it bounces upwards. So support is when price comes down and bounces upwards. Resistance is when price moves up and move downwards as a reaction and then moves downwards from a level. Now, when we talk about Malaysian SNR, obviously we're talking about A levels and V levels and gap levels. Most of you should know this. And the way that we would identify an A level and a V level would be firstly on your line chart, right? So this over here would be an A level because it makes the shape of an A, as you can see. And a V level is the one right below it because it makes the shape of a V, right, down and up. Okay, very simple. And then the only other one that that you can't see on the line chart would be your gap level. Now, your gap level would be the zone between two candles. Okay, like that. So that would be a gap level, right? So we got our A level, we've got our V level, and we got our gap level. And usually what I would advise you guys to do is when you come to the chart in the morning, just take off all your drawings, delete all your drawings off the chart and start afresh, right? So what you want to do is you want to firstly put your chart to a line chart and you want to draw all your A levels and V levels, right? V levels, A levels, V levels, A levels, right? I'm not going to draw everything. Then you want to go back to the candlestick chart and you want to plot all your gap levels. I'm not going to get into fresh and unfresh. I think that's for self-study. And that's something that each of you can go and check out by yourself, the understanding of fresh and unfresh. If I can advise you guys, if you want to really have a good understanding of SNR, specifically V levels, A levels, and gap levels, on the Discord, there's a tab for Zlankater. I have posted and I was part of the January mentorship. So you're welcome to go and check those videos out there. Or if you're on the Red Pill Traders Telegram, you can access all the video content of Zlankater over there. I think he explains it well. Alternatively, you can also check out AKFX on YouTube, which is also free. He also does a good job of explaining A, V, and gap levels. Okay, so that's for SNR, very, very basic. But you will see that with the strategy that we employ, we don't need to get into too much technicalities. For example, there's something called storyline. I don't use storyline in my trading because I'm trading on the 4-hour. Obviously, storyline, you would be looking at your daily levels, and then daily reject, daily 4-hour external breakout, pull back to apex, QM, or decision level or gap level, and then you will take your entry from there. I don't use storyline because I use BBMA, the Bollinger Bands, and I'll show you exactly how I determine direction. I use the BBMA method to determine the direction of my trend. Okay, so that's for SNR levels. It's fairly easy, fairly simple. You guys can self-study that. So I'm not going to try to reinvent the wheel with my explanation on SNR levels. Okay, so moving on to BBMA, which I think most of us would be something that is completely new for most of us. And initially, when you see a chart like this and you see a bunch of moving averages and lines, it is intimidating, right? I will confess that the first time when I looked at a chart with BBMA, I looked at the PDFs. When I saw all the moving averages, and this one even still has colors in between, when I saw all the moving averages on the screenshots, I was completely overwhelmed. I thought to myself, there is no chance that I am ever going to dive into a system that has this much noise on the chart. But when I started reading through the PDF, the 1% Forex Society one, which is also available on the Discord, I've already posted that. I would really encourage you guys to take a look at that as well. When I started reading through it, I couldn't unsee the pattern on the chart whenever I looked at the moving averages, as well as the reaction from moving averages. I couldn't unsee it. But one of the things that put me off in the BBMA method was the fact that there is so firstly, it's a lot of moving averages. Secondly, is the multi-time frame application, which requires 3 time frames, as well as the codes. So if you go through that PDF, you will see that there's a reference to codes, which means that on the one time frame, your main time frame, let's say you take H4, you need to see a re-entry. I'm not going to get into the cycle of BBMA, but there's a concept called re-entry. You will find that in the PDF. If you've got a re-entry on the 4-hour, you need a extreme on the 1 hour, or a MHV or MLV on the 1 hour, and then on the 15-minute you need an extreme or an MHV or MLV. And for me, that was just too much information to bear, and I just decided that if I'm going to get into BBMA, I'm going to have to find a new way for me to avoid the multi-time frame aspect and having to just go through all the time frames to find a setup. I wasn't going to be subjective in the sense that I can't spot an extreme. I'll be honest with you guys. I couldn't see extremes on the chart. I couldn't see the MLVs on the chart. I couldn't see the TP1G on the chart. The only thing I could see was the CSAK and the re-entry, and the CSM and the re-entry, and we'll get into that in a moment. So that was my thinking about BBMA. So quickly, what I'll do is I'll quickly explain what the moving averages are, and the levels, and just how I have customized my indicator to give me a little bit more information than your typical BBMA indicator. Now, what you have is you've got the Bollinger Bands, right, which is the black lines. So if I quickly just untick all these other levels, your Bollinger Bands, very simple to understand. So if you want to, I'm going to ask you to please self-study this as well. But your Bollinger Bands basically measures volatility. So what you will see on the chart is, you will see when price tightens up like this, it means that price is in a ranging market, right? And then when there is an expansion to the upside, you see the Bollinger Bands start to move away from one another. So this one goes up, this one goes down, and it widens, and it just means that we are now in a trending market. And a very nice tip, something that I want you to go and backtest and look at your charts after you put a Bollinger Band on. Look at when the expansion of big trends start. And you will see that they usually start after there is a tight consolidation. So for example, over here, from the start of the year, we've been very bullish on gold. You would have seen that towards the end of last year and the beginning of this year, price started to range. And when you see price starting to range like this, and the Bollinger Bands, the upper band, the middle band, and the lower band start to compress and move together, you can expect an expansion afterwards. And it's usually driven by news events. Like the first candle that expanded to the upside, if I look at the date, it's Friday the 1st of March. Now that is NFP. Okay, so that's where price started to explode to the upside. Okay, so that's your Bollinger Bands. Very important, and you'll see in in the system as we go ahead, and I'll show you how to use it. You'll see that these Bollinger Bands really are valuable in understanding the trend and where price will react from. Let me just see. Okay. The next thing that we have on the chart is traditionally you would have a 50 EMA. Okay, so your 50 EMA is just your overall direction of the trend. The EMA is just your overall direction of the trend, and the way that you determine the trend is when the EMA is below the middle Bollinger Band, it means we are bullish. When the EMA is above the middle line of the Bollinger Band, it means we are bearish. So everywhere where price was, where the 50 EMA was above the mid Bollinger Band, it was bearish. Wherever it was below the mid Bollinger Band, it was bullish. I don't personally use the EMA 50 that much, because I will show you how I determine the direction of the trend based on just using the Bollinger Bands and using the 5 and 10 moving average and the indicator that I have customized to my liking. I'll show you exactly how I determine my direction. Okay, so that's the EMA 50. The next one that you have is a 5 weighted moving average, low, set to low, and a 10 weighted moving average set to low as well. Okay, so this is just wrong. That needs to be L. So what that is, you will see in price action that acts as what I like to refer to as dynamic support. So if we are in an uptrend, this acts as support for price. So whenever you see the candlesticks touch these levels, you will see a reaction to continue to the upside, as we saw here. And this is not just on the daily time frame. But you'll see whenever price comes close to these levels, it bounces to the upside. Now, what I did is I went and I coded into this Pine script. I've added the 8 low, because what I wanted to do is I wanted to have in between, I wanted to minimize the lines on the chart. So what I did was I took 5 and 10, and in the middle between 5 and 10 is 7.5, but unfortunately you can't code 7.5. You can't use decimals into the code. So I just rounded it off to 8. So what you can do is, instead of having 5 and 10, you just have 8. And you see our price also still respects the 5 and the 8, I mean the 8 level, as it moves to the upside. You can see everywhere price, if we're in a bullish environment, everywhere price actually comes to touch that level, it acts as support to push price higher. Okay. And then the second one, obviously, if we have all three on the chart, it would look like that. Okay. So it really looks nice. You kind of have a nice, just a nice dynamic support where you can expect price to move to the upside. Okay, the next one that you will have, the next three would be your 5, your 10, and your 8 high. So this in a bearish environment. So for example, if we look at this price action over here, this area over here, you will see in a bearish environment, when price is going to the downside, this acts as dynamic resistance. Okay, so when price is moving to the downside, every time price goes to the upside, it's going to reject from those levels to continue to the downside. Let's see if there's some more examples. Over here, for example, everywhere price pulls back, whenever it gets to those levels, it becomes sensitive and it rejects from those levels. Same over here. Pull back, clear reaction from there, moves to the downside. And this continues to happen. I would encourage you to go and back test this because it's super powerful to see just how price actually moves. And respects these areas. I will never use, very important, I will never use the red, which is the resistance. I will never use my red zones, my high moving averages, as support. And I will never use my blue or my low moving averages as resistance. This is very important. We don't use them interchangeably. So I'm never going to, when price is up here and pulls back to this level, this red to the high moving averages, I'm never going to look to take buys from there. I want to only take buys from my dynamic support, because that is where price ultimately reacts from, as you see, towards the upside. So that in a nutshell is just all the moving averages on the BBMA. What I will make, and I will post the code, the Pine script code, I will post it on the Discord, so you can copy and paste and do it yourself. If you have any requests or any help, I'll make a short video, post it on the Discord to help every one of you to just insert this indicator for yourself. And then the last thing that this specific indicator has is an area high and an area low. Now what it does is it basically shades the area between the 5 and the 10 moving average high. So 5 high and 5 low, and it shades that area. And 5 low and 10 low, it shades that area, and you can obviously change the color. Now, how I've been using this is, I've been using this primarily to determine my direction. So in other words, I don't use the EMA 50. So I turn that off. How I view it is, whenever, wow, guys are late, eh? Whenever we have blue and gray above, then we're bullish. Whenever we have red and gray below, we are bearish. Simple. A simple way to do that. Very, very easy to understand, very easy to grasp. I would encourage you to start using it as well. Obviously, you can change the shading of the indicator so it does not interrupt how you view the candles. But whenever blue is below, whenever this is shaded blue and this is shaded gray to the upside, then we are in a bullish environment. Whenever it's shaded red and gray at the bottom, then we are bearish. Another thing that I use to determine direction is if price is moving in the upper band and the middle band, then we are bullish. And whenever price is moving in the mid band and the lower band, in between that level to the downside, then we are bearish, as you can see over here. So wherever we were above, we've broken through the midline, and we stayed between the upper band and the middle band. We were bullish. As soon as we broke through that level and we were between the lower Bollinger Band and the middle Bollinger Band, we were bearish. Okay, so this is simply how I approach BBMA. Very, very simple. It does not have to be complicated in terms of all the moving averages, and you will see exactly when I get into the SOP of how I daily come to the chart, you will see that it's actually not that much noise, and you can toggle it on and off if it starts to just overwhelm you. That's really simple. Okay, so what I'll do at this stage quickly, I'll just stop presenting and I'll take a few questions. Please put your questions in the chat box. Is there anything unclear about what I've just shared with regards to SNR levels and BBMA? Because after this, I'm going to get into the SOP. I'm going to get into how I approach the charts on a daily basis and what I'm looking for. I'm going to be discussing a concept of time. So we are going to get into the meat of understanding the strategy. So is there anything unclear about BBMA or SNR? Please put your message in the chat box. So I'll give 2 minutes for that. If everything is clear, maybe you can just unmute yourself quickly and just say yes or no.
Yes.
Okay. Clear. Yes, it is recording at the moment. It is recording. What is gray line? So the gray line or gray area, the gray area is just to check when price is bullish. Then it means that it will be gray above and it will be blue at the bottom. These are just how I've set my colors. You can make this whatever color you want, but I'm just understanding when it's blue below. So the blue moving averages, the low moving averages, your 5 and your 10 area is being shaded blue, and your high 5 and your 10 high is being shaded gray. So when the gray is above and blue is below, we're bullish. When red is above and gray is below, we are bearish. That's simply how I'm using it. Can you please repeat once again when blue? Okay, I just did that. Okay, cool. Okay, we will get into win rate and all of that towards the end. I will explain how I view win rate. And yeah, so we will get into win rate towards the end, but it's really good. So that's all that matters. Okay, so if there's no questions about BBMA and SNR, then I'm going to continue. As I said, I will make all the resources available, or all the resources are available already on the Discord for you to go and self-study. So at this stage, I think what I want to do is I want to actually get into the meat of the strategy. And the way I'm going to do that is I'm going to show exactly what I do on a daily basis. And I think what we will do is we will go to Monday and we will do a back testing as if we traded this past week. And I will show you exactly how I approach the market for the past week and the trades that I took. Okay, so the first thing that we want to do is we want to look on, as you see on the far right corner above, you've got your daily and H4. You want to determine direction. Now, the way that we do that, as I shared, we will use the Bollinger Band. So as I've already shared, it's above the midpoint and in between the mid Bollinger Band and the high Bollinger Band. So we're looking for buys, okay? But then a second thing that you will see when you go through the BBMA PDF is there are only two things that you need to look for, and that is CSAK and CSM on the 4 hour. I'm not looking at CSAK and CSM on the 1 hour. I am only looking at it on the 4 hour and on the daily. So in other words, CSAK means When price breaks through the middle Bollinger Band, right? So over here, when price breaks through and closes above the mid Bollinger Band or below the mid Bollinger Band, when it pulls back to the opposite moving average. So in other words, when we are bullish, price is breaking to the upside. Let me just zoom in over here. So price is breaking to the upside over here. As you can see, this area, this candle closes above the mid Bollinger Band. When this happens, this is referred to as a CSAK. So I'm going to put it in here. CSAK. Now, yeah, so basically price is just showing you that we are going bullish. CSAK, the candlestick closes through the mid Bollinger Band to the upside. Now, what we are then looking for is we are looking to take our first entry, and this they will refer to as re-entry. So when you go on to when you look at the PDF, this will be re-entry. Okay. When price comes back to the low moving averages, this is the first time you are looking to take a buy, and you're expecting price to move aggressively to the upside to take out that high at least of that candle before the pullback. Okay, so that's how we will this is how we will determine direction. Do we have a break through the middle? Do we have a re-entry and a continuation? We are bullish. The second one that we will use is CSM, candlestick momentum. Now, what CSM is the first time when price closes outside the upper Bollinger Band in a bullish environment. That is a CSM. So this indicates when this candle closes outside the upper Bollinger Band, this indicates that we are continuing to the upside. And what we are then looking for is a pullback to the lower moving averages for a re-entry again. Okay, so we will have a re-entry over here. And this is how we look at the market continuously. So every time price breaks out of the upper band, we are waiting for a re-entry, which is over here, because this is a CSM. Okay, there's our re-entry when the wick comes down. Same thing here, CSM, CSM. So I'm expecting that price is going to continue moving to the upside because we've got our candlestick confirmation that we're going bullish. We've got a re-entry. We've got a candlestick momentum. We've got a re-entry. We've got another CSM. We've got another re-entry. All these candles are CSM. So what I'm expecting on the day when I get to the chart, I'm waiting for price to pull back to the blue lines or the blue area in conjunction with my SNR levels, which I'll get into just now. But that's where I'm looking to take my entries in continuation with the trend. Now, you can trade counter trend trades, and I will show you exactly how to trade counter trend trades because it's also profitable, because I'm going to explain how we use time. Okay, so I hope this is clear. This is the only concept that we will use from the traditional BBMA. We won't be looking at extremes or TP-Wajid or MLV or MHV, and then we're not looking at those first three conditions. We are only looking at CSAK, re-entry, CSM, and re-entry. Super easy because you are trading with the trend, which makes it very easy to get in on trades, as you will see in a moment. Okay, so that's just how I use the direction. Okay, the second thing that I'm also then considering is, and what I want to introduce at this stage, is time. Very important. What time is it? Okay, now, because we are on the 4-hour, we are not going to drop down necessarily to 15-minute or 5-minute. I'll show you guys how I use the 1 hour to refine my entries, but you don't need the 1 hour even to get into trades. All you need is the specific time of day, as well as your SNR level. Now, when we talk about time, we will always refer to UTC -4. So I would encourage you guys to set your chart to the New York time because it avoids any confusion. Because if I'm saying I'm trading the 1 o'clock candle, the 5 o'clock candle, then 90% of you are going to ask me what time frame, like what UTC. And to avoid confusion, I will always refer to the UTC -4 New York time. Now, the candles that I am specifically looking to trade on the 4-hour are the following candles: the 1 a.m. candle and the 5 a.m. candle. This is where I have found the most consistency, but you can also trade the 9 a.m. candle. If you understand where price is moving and you can see the bigger picture. Now, if you look at a day, and I'm going to just remove all these just to clear out any. And I'm just going to quickly turn off the indicator. So if you look at a day, let's look at this day, for example. So this first candle, the day opens, this first 4-hour candle is 5 p.m. The next one is 9 p.m. The next one is 1 a.m. And I'll make this a different color. And the next one is 5 a.m. Right? And the next one is 9 a.m. And those, the green ones, and then the last candle of the day, I think, is 1 p.m. Okay, so that that's how on a 4-hour, you will need to check your broker. I advise you guys to use a Wander because this is how I've back tested. This is how I've forward tested. My broker chart aligns with a Wander, and that's why I use a Wander. But specifically, I am only looking to trade these 3 candles per day. Now, what that means is, because I'm not on the lower time frame, it avoids me taking aimless trades. Now, a lot of you guys, for a long time, if you've been in trading for more than 3 or 4 years or 5 years, you would have heard a lot of times people say, get off the lower time frames. And I never understood that until I started trading this. Started understanding that if I don't trade the lower time frames, it means that I'm not chasing after trades. And on the lower time frame, price is moving up and down, but on the higher time frame, there's one move that plays out. And if I can position myself to get into that one move every day, then it means that I don't need to sit in front of the chart all day. I know what time that candle is going to open, and I'm not going to necessarily have to go onto the 5-minute to refine an entry. I've got a set stop loss. I've got a set take profit target. I know exactly what time to come to the chart to take the trade. And a lot of us, maybe your background in trading has never incorporated time. And I want to say that time is super important, because what it does is it enforces discipline for me to say that I'm not just going to take trades whenever I think price is going to move. I'm specifically coming at the open of those candles because I want to see to which side is price going to run to. And now we will put the puzzle pieces together when we talk about the SNR levels. But if I know exactly what time I need to look for the candle, that's one area that I've already got nailed down. Okay, so I hope that makes sense. These are the only 3 candles that you are going to look to trade every single day. And the rule that I have is if I take a trade at 1 a.m. and this is a loss, I'm not looking to re-enter. I'm waiting for this candle, the 5 a.m. candle, to print, and I'm going to look for opportunity there. If I take another loss at 5 a.m., right? So say, for instance, I take a loss at 5 a.m. If I take a loss at 5 a.m., then I'm going to come to 9 a.m. and I'm going to hopefully get a winner, right? If I take a winner at 1 a.m., I'm done for the day. I close the charts, I move on with my life, because what all of us want to get into trading for the simple fact that we want to have more time to be able to spend with our loved ones, more time to do what we really are passionate about. Every one of us, if I ask, do you want to quit your job? Do you want to get out of the rat race? Do you want to not work a 9 to 5? Then all of you say, that's the reason I got into trading. But it doesn't help. We say that is the reason we got into trading, but then we spend most of our day in front of the charts. We need to find a system that's going to minimize our time on the chart, give us what we need in order to have the freedom to spend with loved ones. And this is exactly what I'm trying to achieve with this. Okay, so those are the 3 candles that I am looking for: 9 a.m., 5 a.m., 1 a.m. What I will say as a disclaimer, the 9 a.m. candle, I would be very reluctant to trade. And I would encourage you guys, as you are starting out with this, focus on the 1 a.m. and the 5 a.m. candle. As you will see, they are more predictable. Usually, if price is wanting to pull back on those two candles, then you can expect the 9 a.m. candle to go to the upside or to the downside. But if we, based on our trading plan, which is just to get 2R, it means that it's an easy, stressless trade. But because the 9 a.m. candle is very manipulated, because you've got news sometimes in that time, you've got news, and you've got the New York Open, which means that price is very manipulated and volatile during that time. So I don't want to necessarily trade the 9 a.m. candle. I only trade the 9 a.m. candle if I have absolutely not gotten any entry in the 1 a.m. or the 5 a.m. or I've taken a loss in the 5 a.m. Then I'm going to come to the 9 a.m. Also, I'm only, when we talk about trading plans, I'm not willing to take more than 2 losses a day. So if I take a loss in 1 a.m. and 5 a.m., then I'm not trading for the rest of the day. Okay, so I hope that makes sense. I'm going to move on to the next part. So that's time. So we're looking at those 3 candles, 1 a.m., 5 a.m., 9 a.m. Okay, only on the 4 hour. Now, the next thing that we want to look at is, obviously, we want to look at our SNR levels, right? So when I'm coming to the chart on this day, right, there's nothing on the left. I am marking my gap and my A and V levels. So first thing, right, that's not even worth looking at, because there's no V levels to where price can bounce from, but we do have a gap level over there. So that's all I'm doing on the line chart, on the candlestick chart on the 4 hour. I'm drawing my levels, my SNR levels, and now I want to see what the 1 a.m. candle is going to do. Right now, we want to trade the 1 a.m. candle. Okay, so let's see what the 1 a.m. candle does. Okay, that's no entry. But what has it created for us now for our 5 a.m. candle? It's given us a, if you look at our line chart, it's given us a level. So if that is the premise, I am either going to sell, and this is where this week what I want you to do is I want you to observe live price action. Some of you messaged me saying, I did back testing and I took a lot of losses. You will need to, with this strategy, you will need to observe price in a live environment, because there's a thing called candlestick. What's the word I'm looking for? Candlestick anatomy. All right, so all of us know how candlesticks form. We've got an open, we've got a high, we've got a low, we've got a close. All right, so that would be a bearish candle. This would be an open, a low, a high, and a close. That would be a bullish candle. That one is bearish. This one would be bullish. Right, so understanding candlestick anatomy is very important, because if price is going to finish open, high, low, close, then it means that they are going to manipulate price to the upside to then trap traders long to take price down. Now, what we are doing is, in our strategy, we are saying that when they do that, they are going to react from an SNR level. And the same thing applies for the bullish in my environment. If we understand OLHC and OHLC, we will look at OH to get our entry, and then we are trading towards LC. And the same thing when we are bullish, we are looking to get in at OL to then trade to HC. Okay, so when they are manipulating, when we think that price is going to go to the upside, then probably it's seeking for an SNR level from where price will react from. And the only way that you can do that is if you're observing price lifetime. Now, let's see what happens here on the 4 hour. Oh, this person is really late. So price is currently over here. So chances are it's going to go up and then down. Right, so I'm taking short there. Okay, zero entry. Doesn't give us an entry. Okay, as you can see, price came down. It really wicked long into here. So there was probably not an entry there. In this case, you would look for the 9 a.m. candle. But what do you have now? You've got a gap level over there. Okay. There's our entry. Now this is just simply SNR. I haven't even added in the BBMA yet, because when we add the BBMA, then we will start to see why we took a short here. Okay, so I'm going to add that in now. Firstly, are there any questions with regards to what I'm sharing at the moment? You can put it in the chat box. Okay, does it make sense? Is it clear? I will get to trade management. I will get to all of that right at the end. I just want to get through the strategy. Okay. Okay, so I will continue. So on the 4 hour, I've got my SNR. Let's replay this candle so I can show you guys how I take the trade. Okay, so we've got the 9 a.m. candle over there. Turn on our Bollinger Bands. Right? Here we've seen price was reacting from this area over there. Right? But we didn't have an SNR level to get the entry. So I wouldn't have taken that trade. This is too big. You take a loss here based on our rules. And I'll explain that towards the end of the session. This would have been a loss if you had to take the buy here, because you would have been stopped out. And the actual level that you're looking to trade from, as you'll see when we go to the 1 hour, is down here. So let's talk about the sell. So when price is closing down here, okay, as soon as price opens, I've got my two levels. I've got this SNR level, I've got that gap level, and I've got that A level over there. Okay, so now what I'm doing is I'm going to go onto the 1 hour. And what I'm seeing on the 1 hour is at this SNR level, I've got 3 moving averages, which are bearish moving averages at that level. Now, if we understand the following, if we understand that we have static support and resistance, and we have dynamic support and resistance, then it means that wherever static, which is your H4 SNR levels, these horizontal lines, is your static support and resistance, and your moving averages is your dynamic support and resistance, because it's moving along with price. Wherever there is a convergence, so in other words, whenever they meet, that is a strong rejection zone. So now you've got your static and you've got your dynamic over here. You've got it lined up and aligned with one another. So now we look for time. Remember, this is 8 a.m. We are looking to trade the 9 a.m. candle, because 5 a.m. didn't give us an entry. 1 a.m. didn't give us an entry. We are looking to look, don't get confused when you go onto the 1 hour. A lot of guys go into the 1 hour and they get chopped up because they forget that we are taking the trade based on the 4 hour, not on the 1 hour. We are only taking the entry on the 1 hour. And what we are looking on the 1 hour is simply for confluence and convergence of static and dynamic support and resistance. Now we can see that the red line is over there. This is 8 o'clock. I am observing price. Obviously with back testing, it's a little bit crappy because we literally just have to see the candle print. But obviously in live market, we see the open, we see the price going down, we see the price going up, right? So what do we see over here? So I usually have a 1 to 2. And at this point, let's talk about how I've developed the plan. 25 pips stop loss to target 50 pips is all you need. Whether you get the direction wrong does not matter, because if there's strong convergence between static and dynamic support and resistance, whether you get the overall direction of the candle wrong, it will still give you a reaction and still give you at least 50 pips. So that's why in my testing, I've not gone for big risk to reward. But you will see that if you compound this throughout the day, you can end the day on 10R or 8R. If you understand the anatomy of a candle, understanding the OHLC and the OLHC, and the price manipulation when a 4-hour candle opens, you can take the trades and still make money even if you have the direction of that specific 4-hour candle wrong. Okay, so this will be our trade. Look at that. It taps into that zone. We've got our 3 moving averages in conjunction, convergence, static and dynamic resistance. It's going to go down. And that is as simple as how it gets. This would have lasted probably a few minutes, because what I've seen is when price reacts from this zone, it's not going to hang around there. So what I do in trade management is, as soon as price gets 1-to-1, so as soon as price moves 25 pips into profit, I am setting my stop loss to break even. And then within another 5 to 10 minutes, it's running to my TP and I'm done for the day. As simple as that. Okay, so that was on the Monday. You take the 9 o'clock candle, that is done. But you must not forget that the overall trend is still bullish. And what did I say about the fact that we are bullish? This is also a trade. So we took the short from up there. Price came over here, right? Because we had a CSM, and we are saying whenever we have a candlestick momentum, we are taking a we are taking the re-entry at the blue Bollinger Band. I mean the blue moving averages, right? The low moving averages. So what is over here on the 1 hour? We don't really have a zone from there. So I'm not taking that trade because we don't have a zone. We don't have dynamic. Let's see. Yeah, the only one we had there is the lower Bollinger Band, which I don't necessarily want to use. You can use it. You can backtest it. It is a powerful support area, but I'm going to actually show you guys. I think our friend EMA 50 was there. So if you wanted to, you can play that trade. Wanted to, get stopped out. And I'm going to show you how I'm tightening up when the moving averages are far away from SNR levels. I'll show you exactly how I tighten up my entries to get in over there. Okay. So obviously price is bullish, so we are expecting price to go long, but that's Monday. We already got our 2R for the day, so we don't necessarily want to take more trades after we've already taken a winner. Okay, that's just according to my rules. Okay, so that's the Monday. Let's move on to the Tuesday. So what happened on Tuesday? Let's see. Okay, we've got 5 a.m., 9 a.m. We're looking for the 1 o'clock candle. First things first, I'm drawing my A and V levels. Right, I've got an A level, I've got a V level, I've got a V level, I mean an A level, I've got a V level. Okay, candlestick. What do I have? Do I have any gap levels? This gap level. So I'm looking, price is looking, if it's over here, right? Is it going to go short and then go up? We have to see the candlestick formation. Okay, so what we're going to do is, let's go on to, right? We also see the moving averages are moving up. So when at the time when the next 4-hour candle prints, this might be over here, which is also an area of support then on the 4-hour. Okay, so let's go onto the 1 hour. Let's observe the time, right? We see this is where we get our entry. So let's see what 1 o'clock does. That's an entry. Okay, let's wait to see if price comes down a little bit more. Okay, let's take this trade. And the reason why is because if we've got a 25 pip stop loss, it covers all 3 of those areas. Okay, boom, done. That's 2R. Okay, so we're done for the day. And look at where price went right up. Because we are in a bullish environment, that was a perfect entry. Done for the day. Okay, let's see what the 5 a.m. candle does. 5 a.m. candle comes down, goes up again. 9 a.m. candle probably had news, but look where it's reacting from. Look where 9 a.m. reacted from. 9 a.m. reacted from the A level over here in conjunction with what on the 4-hour, which is why I also say you don't necessarily need the 1 hour. The 1 hour is just an extra confluence. But look at this. We have static, support, and dynamic support coming together to give us our entry. Now, what you can do is, and as I was talking about tightening up your stop loss, is you could say, I'm taking the trade from there, right? From the static support and resistance. And it means that you will probably sometimes have to sit through some drawdown. Or you can say, I'm going to take the trade from the dynamic support area. But the risk with that is that you don't get triggered in the trade and price doesn't retrace as deeply and just moves from the static support and goes to the upside. But what you can do is you can take a, let's quickly zoom in here. What you can do is you can take a fib tool. Let me just turn this off. You can take a fib tool, set it from the SNR level to the moving average, and then take your entry from the 0.5 zone. So now you're in between zones. That's just to tighten up your stop loss, or to just avoid having to sit through drawdown. But it's not necessary. If you've got a 25 pip stop loss, it should be big enough to cover all of those zones and include that. But that is your 9 a.m. trade. Okay, let's move on to the next day. Okay, so we've made money on Monday. We've made money on Tuesday. We are going to go to Wednesday. Let's take all this off. Okay, let's move to Wednesday. Okay, we're still bullish. Right. Wednesday, that's 5 a.m., 9 a.m., 1 a.m. Okay, what do we have? We've only got that gap level. Okay. We don't have anything else to trade from, so we go into the 1 hour. Okay. What does price give us? Do we want to take that entry? Not necessarily, because 1 o'clock doesn't really give us a strong zone. I prefer to use A levels and V levels. Obviously, it gives you a reaction over here, but I'm sure that if you had to take the trade based off that, I think you get stopped out. Yeah, you get stopped out. So I didn't take this trade. I waited for the 5 a.m. candle on this day. Okay, so I would advise you guys to take the 5 a.m. candle, the 1 a.m. candle. In this case, if there's not a lot of zones that Asia has created for us, then we rather wait for the 5 a.m. candle, because what we have now is we have that. Okay. We've got that gap level, and we've got this gap level. Okay, so let's see what the 5 a.m. candle gives us. No entry. Right? It's not reacting from anything. I'm not taking this buy because I want my static support to align with my dynamic support. So I'm not taking this trade. Even if it's reacting from here, I'm not taking that trade. 9 a.m. was a trade. Okay, let's replay that. What do we have before 9 a.m.? Remember, we are bullish. We've got this V level. Okay, we've got that V level. So we go down to the 1 hour. What do we have over here? Okay, let's see. Right, we've got divergence, right? We've got convergence over here, right? This is moving up. It's at the SNR level. See the next candle. There you're already in the trade. Okay, so if we say this level and that level, let's do our 50% rule. Okay, towards the moving average. That's our entry. And we can see, done. That's 2R done. Very easy. Now, what I will say is, What I will say is you need to be a little bit flexible in terms of your entry when price is not, because the moving averages are not always going to align 100% with the SNR level. But what you do know is that if we are on the 4-hour bullish, right, if we've already reacted over here, we've already given a strong reaction over the 5 a.m. candle, and we've created a V level over here, then even though price is not on the 1 hour aligning 100%, we know that it's flipping, right? We know, we can see the low Bollinger Band is coming up, the low moving averages are turning. So this is where I actually did take this trade, and I got my 2R within a couple of minutes because price really moved to the upside. So yeah, it's very, very easy, but you do need to be flexible in terms of just refining your zones. But even if you took this like this, you still don't get stopped out. All right, your 25 pips, you do sit through a little bit of drawdown, but ultimately price runs to your TP. Okay, so that is on Wednesday. Let's move on to Thursday. Guys, I'm just going to run through this week and then I'll take some questions. So we're almost done. That was Wednesday. Remember, we haven't taken any losses yet. Yeah, we've had 3 winners for the week. Okay, now we get to Thursday. What do we have? I'll first go to our line chart. We've got that A level. We've got this gap level. We've got that gap level. We've got this A level. There's a gap level. I'm showing you all the areas now, but obviously some of these don't have context for what's up there, but let's see how price goes. Okay, so now on this day, for example, you would have only been able to take this trade if you look at the opening of the candle. All right, so if we go on the 1 hour, what we can see is we've got our H4 static resistance, right? We've got the dynamic resistance that's also turning. And if we look at this candle, it's going up there. We will take a sell from there. And we will use our 50% again between our SNR level and the moving average. And we will enter like this. This was a trade I took. And done. On the 1 a.m. candle, done for the day. Let's look at what the next candle did. Okay, we're now coming to the 5 a.m. candle. We've got this resistance over there. We don't have any SNR level from which it can actually pump up. We do have the static support over here. So let's see the reaction. And I'll go on to the 1 hour. But here again, the same thing happens. Same thing happens. The same thing happens again. Here we've got a reaction, but we're still waiting for the SNR level to come. I mean the dynamics resistance to come around. Now you can enter here, and I'll show you. You can enter over here. Sorry, take 1 to 2. You can enter over here, but look what price gives you. Right, drawdown, and then it hits your TP. And actually, on this day, this was the only day that I didn't take a loss, but I took a small win because I was impatient, because I had entered on this candle over here when price got to this level over here, and I saw that the dynamic resistance was coming down, so I entered early. I entered prematurely, but I reckoned to myself, I've got a big enough stop loss, so I'll be willing to sit through the drawdown. But what I could have done, what would have been better, is if I had actually waited on this candle this hour over here to come, and then just take out my 50% tool and my fib, pull it up to there, and then take the trade when price gets to that 50% between the two levels, and just take the trade from there. Then I wouldn't have, because I will admit, this day I got emotional about the trade because I have been sitting in the trade for 1-2 hours already, and that's the longest that I've been sitting in trades using the system. And so I had closed the trade over here just under 1-to-1. I didn't make a lot of money on that trade, but just as I closed the trade, it started running to the downside, and I wanted to kill myself. I wanted to kick myself because it was so bad. That price actually just melted to the downside. So it was really, yeah, it wasn't nice to see that happen. But I learned my lesson in saying I can trust the system. And so what happened was I didn't actually take a trade. I don't think I took a trade on this day. Yeah, I didn't take any trade on this day. But you could have taken the buy over here. Same candle, we took the sell from there, and we take a buy from here. Once again, we've got our EMA 50, we've got the low moving average coming to the upside. Okay, that wouldn't have given you an entry. So no entry over there. Okay, and now you will see price actually goes bullish. Okay, this is also not valid for me because there's no entry over here. One of the things that I will say is if you can prioritize A and V levels, then you should do that. I prefer A and V levels over gap levels, but as you do see, price does respect the gap levels. But obviously, I had already been done for the day over here, and I just decided I'm not going to trade for the rest of the day because I did take a small profit, and I wanted to stick to my rules, and so I just didn't take this trade at all. But on this move, for example, if you had observed the live price, you can actually, let me see if I can show on the 1 hour. Somewhere over here, there was a trade. Even in this big move to the upside, there was a short opportunity. Now, you will need to go into the lower time frames to actually see the behavior of price, but it also gave you a 2-hour trade over here somewhere. And that's why this week coming, it's going to be really important that you observe price in live time to see actually the opportunities that you get. If there's a alignment between actually, yeah, this was the short. This was the short. I'm so sorry. I just saw it now. The 9 a.m. candle. This was the trade on the 9 a.m. candle. There's a gap level. There's a gap level. We just don't have any divergence or the convergence on the 1 hour. But we do have on the 4 hour, we've got the levels over there. So this is a riskier trade. But I mean, if you take a short there, you still make money. Okay, so Thursday was a day that, yeah, because I closed the trade prematurely, I was like, nah, I'm not going to trade for the rest of the day. I'm done. I got emotional. And if you get emotional, then you don't trade. Okay. Let's move on to Friday, which was yesterday. Yesterday was really nice because I was done within the first candle. Okay, so when we get nothing over there, we've got that level, which price has already reacted from. So the only other level that we had was this gap level, and we had this SBR. Okay, and then when you go on the 1 hour, you see there's a strong convergence between dynamic and static over there. So that was my trade right there. Obviously, now you don't need to use your 50% tool because you're aligned, and you've got the EMA 50 over there. So that's really strong. And simply what price did was this. Weak entry done. That was such a nice trade because I was done for the day. I didn't even look at the rest. Before NFP could come and take my money, I was done for the day. Okay. So that was that candle. Then we had NFP. And NFP, if you look at this trade over here, when NFP came through, if you draw levels, that's a gap level far back. I don't like it, but there is a convergence between dynamic and static. On the 1 hour, there wasn't really any other zones that confirmed that, and I don't like to trade NFP. But what you can do is look at the 9 o'clock candle. So if we are now on the 4 hour, we've rejected over there. Remember, we are still observing bullish price momentum. So what levels do we have at 9 o'clock? We've got that level, that gap level. Remember, price is now closing over there. We've got this level. Okay, but we are overall bullish. So what are we going to look for? Let's see on the 1 hour if there's any. Right, we got the blue area that's over here, looking for buys. And if we take our 50% tool again, our FIB tool, between those zones, and we enter on 50%, there's our last trade for the week. And if you wanted to, if you understood, and I'll show you something very interesting. If you understand what happens on the 4 hour is fractal and on the daily, then you will also see that daily gave you a CSM all through here for the past week. It's 1, 2, 3, 4 days of closing outside the upper Bollinger Band. This was a pullback to this level. Right, so NFP wick down into the blue moving average. Remember, we have CSM and then we have re-entry. So when price comes there and it reacts on NFP, if we understand that we are at least going to take out that high and price is going to go aggressively to the upside because we have the higher time frame on our side, then when we come to the 4 hour and 9 o'clock gives us this beautiful entry, then we're going to hold this trade up until the high Bollinger Band at least. That's a 12-hour trade. So what did we have for the week? 0 losses. Yes, we had, it's 2, 4, 6, 8, 10. So 2 hours per day. I think just the Wednesday we didn't have a trade. So that keeps us on 8 hours for the week. And that is the gist of it. Now, very important, before I get to questions, what's very important is when it comes to a trade management, I'm taking 1 to 2, 25 pip stop loss, 50 pips TP, and how I'm managing the trade is break even at 1 to 1. This is my trade management. Very, very simple, very easy. And when price is at 1 to 1, man, it's within 5 to 10 minutes, we are hitting our TP. And then we are done. And that's as simple as it gets. Cool. Are there any questions? Please put your questions in the chat box. I see Junaid has a question. So if H4 gap AV plus H4 EMA, we can trade. If H4 gap AV plus H1, yes. H4 gap AV plus H1 EMA 50, we can. Yes. So what you can do is very important. You don't only use the high and the low moving averages. You can also use the Bollinger Band low on the 1 hour and the high on the 1 hour and the mid on the 1 hour and the EMA 50 on the 1 hour. So if you have convergence on your 1 hour alignment with your 4 hour zone, your 4 hour support or resistance line, then you take the trade. Okay, how do you treat, I hope that answers your question. How do you treat the spread? Oh, very important on H4. If on H4 you have MAs, you have your moving averages high or low in alignment with the direction of the trend. So if we are bullish, and on the 4 hour you have an SNR level and a moving average or a low Bollinger Band in a bullish environment. If they align on the 4 hour, you don't go onto the 1 hour. You take the trade on the 4 hour because the 1 hour is just if you've got an SNR level on the 4-hour, but you don't have moving averages on the 4-hour aligning with the static support and resistance. So that's very important. If on the 4-hour static and dynamic are aligning, then you take the trade on the 4-hour with a 25 pip stop loss and a 50 pip TP. If on the 4-hour you only have static support and resistance, then you're going to go look for dynamic support and resistance on the 1-hour as confluence. That's the only time you go on the 1-hour. I think that's very important to clarify that. So that's how you treat it. Okay, how do you treat the spread? Are they already calculated on the 25 or 50 pips? I don't necessarily consider the spread. That's something you will need to test. Because I'm trading a specific account, I think I've got a low spread account. It's not really that important for me. I don't really consider the spread. So yeah, I'm sorry. I don't know if that answers your question adequately, but I'm just having a 25 pip stop loss, 250 points on my broker, 500 points TP. That's all. Any other questions? What is MLV and MHV and CSA? MLV and MHV, you can go and look through the 1% Forex Society document PDF that's on the Discord. It's basically just a method of price action used in BBMA. So you have, it starts with extreme, then it goes to TP Wajib, then it goes to MLV, market loss volume, and then it goes to CSAK. So CSAK is when price breaks the middle Bollinger Band, and then we get the re-entry after that on the low Bollinger Band, on the low moving average or the high moving average, which is the pullback in, and then continuation in the trend. But we don't look at MLV or MHV. We don't look at extremes. We don't look at TP Wajib. We just look at CSAK and re-entry. And the only reason we use that is to determine direction. We don't look at it to trade it in the BBMA way. You can do that. And I'll actually show you guys an example quickly of how you could have used BBMA. Let me just share my screen quickly. I will show you how you could have used over here. I think it was on the, over here, just on the 4-hour. Look at this. So what you will do with BBMA is you will see this is the CSAK over here. Price closes above the mid Bollinger Band. Right now we have a re-entry over here. Now what they would say is you would mark this zone, right? So you would mark that zone, and then you would use multi-time frame codes to get into that. Now we don't do that. All we do is we draw our V level. Come on guys, easy. I'm not gonna spend my time looking at lower time frames and trying to see what's on this time frame or that time frame. I have a V level there. There's my entry. And it's aligning with it's static support and dynamic support over there converging. I'm going long here. Simple. Okay, then basically, okay, I'm looking at the other question. Then basically direction is not important. Just H4 zones with H4 dynamic or H4 zones with H1 dynamic. Direction is important because you need to know if you're going to take a counter trend trade, where do you need to look to take a buy again? And we've already looked at direction. How do you determine direction? You're going to look at where is price in relation to the Bollinger Band midpoint or the high or the low. And then you're also going to look at the colors of the area, right? So gray above, blue below is bullish. Gray below, red above is bearish. So that's how we determine direction. Okay, I don't use the codes REE, REM because that implies that I need to have multi-time frame, and I don't use multi-time frame because my SNR levels have replaced my multi-time frame necessity. So that's the power of SNR. Yeah. Do we need to consider AV and gaps to be fresh, or we can use unfresh as long as they're aligned with dynamic? So what's very important is AV levels are, I don't look for fresh and unfresh because I draw them based on the line chart, and nowhere on the line chart do they become unfresh. So I use AV levels, unfresh or fresh, doesn't really matter to me. Gaps, I would prefer to be fresh. And specifically, I would like to have gaps that have be informed as recent as possible. So if I've got a gap on the left-hand side and we've traded through that gap level, I'm not necessarily giving power to that specific gap level. I'll show you guys an example. Okay, so let me just see. Okay, so over here, for example, let's see. So let me see if I can find an example. So for example, over here. So let me just turn this off. This is a gap level that's fresh. This one over here, where price reacts from. But we also, that's also unfresh. That's unfresh. Okay, sorry, that's not a good example. There was an example I saw earlier here somewhere. But basically what I'm saying is, if there was a gap level over here, for example, right? And we also have a gap level to the left-hand side on this side, prioritize this one, not this one, if that makes sense. So let's say price had a gap level over here, right? We are going to prioritize this gap level for the entry and not that one that's behind the price action. So take the most recent fresh gap level, if that makes sense. Okay. Do you prioritize the H4 MAs or the H1 MAs to be close to the zone? So as I said, if H4 MAs align with the H4 SNR levels, I'm staying on H4. If SNR levels are on H4, but there's no MAs aligning with those SNR levels on H4, I'm dropping down to the 1 hour to find then the MAs on the 1 hour to align with the H4 SNR level. So I'm never drawing 1 hour SNR levels. I only use H4 SNR levels, and if my MAs align with those H4 zones, then I'm taking the trade on H4. If they don't align, then I'm going to H1 to see if there's anything on H1. Yes. Remember, I want you guys, please, when you walk out of here tonight, or whenever, yeah, whenever it's morning, maybe for some of you, static, dynamic, keep that front and center. And if you wanted to find an interesting way or to name the way that I trade or the strategy that I use, it's basically static and dynamic support and resistance. That's all I'm trading. Any other questions? I know we went on longer than just an hour, so I apologize for that, but I'm hoping that what I've shared tonight was valuable for you guys. Are there any other questions? So in my backtesting, I have backtested January and March. January, I think we had 21 trades in January, 20 winners, 1 loss, and 45 R, which makes it a 90, I think it was 92% or 95% win rate. And then March also had, I think, 22 trades, 20, I think it was 21 winners and 1 loss or something like that. So this is super, super high, a super high win rate. But when it comes to win rate, it's all dependent on how disciplined you are with the system, right? So if you are not going to stick to the rules, then obviously your win rate is not going to be the same. And that's where mindset and discipline and a trade plan comes into play to make sure that you keep that high win rate. If you're not going to move to break even at 1-to-1 and the trade comes back and hits you at stop loss, then obviously your win rate is going to be less. So that's very important. But it is a high win rate. I've seen 90. I mean, I haven't taken a loss in the last 2 weeks. That's the reality of what I've showed. I've showed you guys the price action for this past week. There's not 1 loss in there because I'm staying on the higher time frame. So I'm taking less trades, but higher quality trades. That's super, super valuable. Okay, I have only back tested this on gold, but I do have a friend that started using it on GJ and GU, and he says it works. Gold is all you need. You don't need to have multiple pairs. What I will say is, if you want to move into another market other than gold, I will suggest you look at oil, because oil also moves very, very powerfully. It moves very volatile. It's very volatile, and it also respects the SNR level. So if you want another pair to trade, I would consider oil. I'm sticking to gold, but if you want to backtest, go and backtest oil. Okay. So if the first H1 candle goes up, we'll take sells according to the candlestick anatomy. No, brother, we look at the H4. We don't look at price action. We don't frame our setup on H1. We take entries on H1. H4 is where we look for the setup. And if there is a setup on H4, you are looking for the candle anatomy on H4. Right? You don't look at the candle anatomy on H1. Otherwise, you're going to get confused. I might publish a PDF. Definitely. It's something I will consider. I have recorded this session. And so once this meeting is done and I stop the recording, I will post it on the Discord group. Okay, so if there's no further questions, I quickly want to chat to you guys about the mentorship option. This is definitely not compulsory and it's not needed to be profitable. And my idea is not to make money out of this at all. And that's why I have provided as much value as possible tonight, hopefully for you guys to go and start trading this from Monday. I would advise you guys to look at the price action on Monday, observe the week, see if you can train your eyes to see what I've shown on the chart. But the idea is not for me to make money. And I with full transparency, I've shared all the knowledge that I have on this system and something that I'm actually trading on a day-to-day basis. I've shared it in full transparency with you guys. I've not hidden anything. I've been as transparent as possible. And so I believe that when it comes to a mentorship, it shouldn't be about trying to have people pay to learn a system. I think education should be free and everyone has a right to learn. And therefore, I haven't charged you to learn what you've learned tonight. But if there is a deeper desire for you to have a trade plan. So I've got an Excel spreadsheet where I've put together a trading plan. I've got trading plans if you want to flip accounts, if you want to trade conservatively. I've built something with a risk calculator and everything where you don't need to have a risk calculator on your MT5 or MT4. It's something that you can have on an Excel spreadsheet. And I'm currently looking at developing an app for the cell phone that you can use. If you want that, or if you just want someone to be accountable to that can look at your trades, your charts on a daily basis and give you input. If you're looking for someone that can have daily reviews, live calls, then I'm going to be offering a mentorship. At the moment, I'm looking at charging $60 a month. So you pay your $60 and it means that you have access to me on a daily basis. You share your chart, I give you input, we have live calls. I share my analysis in the Discord. There's a private area that you will be added to. So if that's something that you would be interested in, you're welcome to contact me. I will share the details on the Discord. You pay per month. I see someone's asking for month or lifetime. So it's $60 per month. But my advice, and this is what I would do, pay the $60. If it's not worth it for you for the month, then you cancel. Because that's what I have done in the past. I've joined mentorships. I've paid the $60, $100. I've joined for the month. If I didn't find value out of it, I canceled my subscription. And with the system, you're going to make your $60 back within one trade if you understand the risk. So yeah, that's in a nutshell what I thought I'd share with you guys for tonight. If there's any further questions, I think what I will do is, because I want to make sure that everyone is on the same page, what I will do is I will do the following for us. Let's trade this week. So you guys go and test the system in a live market environment. And then we schedule another Zoom call next weekend where if you have any questions, any observations that you've had through the week, I'm willing to do another call next week for all of us to just give our insights, ask your questions. So prepare your questions, throw them in the chat. I'll aim to answer them. But I think what needs to happen is you need to go and see price action in a live market, see how candles print, and that sort of thing. Cool. If there's no other questions, then I think we're going to call it here. I think we've gone on for an hour and a half already. So I'm trusting that this was valuable for you guys. I like the SDSnR strategy. I love that. I think let's coin that SDSnR strategy. I like that a lot. So yeah, I'm trusting that you guys found value from this. Please, if you want, send me a private message on Discord. If you want to give me feedback on how I taught, please, I'm always wanting to learn. So please don't hold back. If I wasted your time, then also tell me that. Cool, guys. Thanks so much for joining. I'm trusting that you found value, and we'll keep the conversation going on the Discord. Cheers. Have a good evening or morning or wherever you are. Okay. I just want to